SOUN stock has lost about 35 to 40% this past month and it's crashing together with overall market, which drives all of the investors crazy. I know for a fact that most of you regret entering different positions right now and wish they had left their cash under the pillow to stay warm, cozy and slowly deteriorate together with the inflation. But what if I tell you that this is a great chance to buy stocks with the discount and to actually double or triple your money in relatively short period of time? And in order to do that, first of all, we need to stop panicking and to actually understand whether or not this drop has something to do with the business or fundamentals of our stocks, or is it just a panic sell? And the funny thing that in most cases it is a panic sell, but in case of SoundHound it's not. This stock has been majorly overvalued in the past, with price to sales ratio of over 60, while the sector's median was about 3, so it was approximately 2000% overvalued. Approximately 3 or 4 weeks ago, when SoundHound stock was about $10 per share, I made a video and suggested not to rush to buy the dip. This week we've got some new information from the management of the company. It was their 10K filing and I want to go over it with you and to reveal some of the positive and negative catalysts that actually the management of the company sees for this company, together with the risks that all of the investors should pay attention at, and of course we will answer the question whether or not SoundHound AI is a buy now, and if not, when should we enter this position. Hey there and welcome to the Market Monkeys channel. It's Julia here and I want to tell you in a few words what SoundHound AI does in order to explain why I think it has a great competitive advantage over Google and Amazon. So SoundHound AI specializes in voice recognition and AI-powered conversational platforms, and it has 3 main revenue streams. First one is royalties, and this is basically licensing its AI to products like cars, TVs and IoT devices. The next one is subscriptions. It's their new and the most prospective revenue stream, and this is all services for businesses, including customer service and restaurant voice ordering. The last one is monetization, which is basically advertisement, and it's less than 1% of their overall revenue, so I'm not even sure why would they bother. It's important acquisitions like Sync3 and Amelia have helped them already to add new industries like automotive and restaurants, and right now they're working on adding also financial services, retail, healthcare and others. In the recent 10K filing, the management emphasized their heavy investments in intellectual property, and right now the company has 192 patents granted and over 109 patents pending, and this is basically one of the competitive advantages that the company has, and this is one of their strengths. SOUN started entering this voice AI market relatively early, and we can definitely say that they're working hard on creating this niche for themselves and on capturing market share of this big growing market. And by the way, this market is big. Conversational AI market is supposed to grow the same as overall AI market at a compound annual growth rate of approximately 25-30% from 2024 to 2030, and is expected to be about $50 billion in 2030 and about $62 billion in 2032. And right now it looks like SoundHound is perfectly positioned to profit from this growth. If you find this information valuable or useful or interesting, don't forget to support this channel by pressing a like button and subscribing. But that's not my major point. My major point is that SoundHound AI gives a decent fight to the giants like, for example, Amazon's Alexa, Google's Assistant, or Apple's Siri by allowing businesses to maintain control over branding and user data when using voice AI solutions. This basically means that SoundHound AI allows customers to create this fully personalized, customizable AI assistant, like for example what Lucid Motor did. It developed Lucid Assistant, which is based on SoundHound's technology, but it's fully customizable and they are actually keeping the data that they gathered. Unlike SOUN, Amazon and Google actually want businesses to operate inside their ecosystem and they're limiting the access to the gathered data. So this is one, in my opinion, of the major competitive advantages that SOUN has over these companies. Of course, the business would prefer to fully customize and to fully choose how this voice AI assistant will be operating, and of course they would want to be able to access the data they gather at any time. Another great piece of news is that SoundHound is partnering with more and more car manufacturers. SoundHound's voice AI technology is currently deployed in millions of cars and TVs across 20 brands and more than 25 languages. Its chat AI automotive is now available in Lucid Motors, Alfa Romeo, Citroën, Peugeot, Opel and many others. Besides, probably all of you have heard about its AI-powered ordering solutions for restaurants, and SoundHound is closing deals with big names like Torchy's Tacos, Chipotle, Five Guys, and many others. All of these partnerships are great on their own, many of them paying by the subscription model, which actually brings SoundHound a stable, predictable income and allows them to plan for the future. But it's not an only plus. All of these big names, all of these big partnerships will enhance companies' credibility, and more businesses will likely want to sign SoundHound AI. It's basically like a snowball. You need to roll it enough, like Palantir did, for example, in order for it to start working on its own and bringing new customers on its own. So if everything is so great and if everything is so perfect, what is the downside, you may wonder? And in my opinion, the only risks and the only downside is only in fundamentals and not in the business of the company. So SoundHound AI has never been profitable, it's a relatively new company and they're burning through cash. Net loss in 2024 was a shocking $350 million, and it's a lot, it's a huge losses, and it was up from $89 million in 2023. Despite raising capital, negative cash flow that is not only not stable, but that actually got 3 times higher is very concerning. And of course, company has been funding itself by issuing shares and diluting shareholders. Shares outstanding jumped from approximately 250 million at the end of 2023 to 360 million by the end of 2024. This is a huge increase. This is an increase of more than 40% over 1 year. And the company is burning through this cash that it's raised from investors with a very high speed. By the way, there is an interesting piece of data that I found in their 10K filing, which is basically positive, but we should pay attention to this because it's still a risk for investors of the company. So hear this out. In 2024, one customer brought SoundHound 14% of its total revenues, but during 2023 and 2022, 2 and 3 customers brought SoundHound 62 and 67%. So the situation is rapidly improving without a doubt, but still we should not rule out concentration risk. If this customer that brings 14% of revenue unexpectedly pulls out, the stock will definitely crash. SoundHound AI has a market cap of $3.4 billion, which is considered a mid-sized company in the tech world. It's nowhere close, of course, to the big giants like Google and Amazon, but it's also not a startup. This means that the company has huge growth potential, but the stock of this company is also volatile. And right now we need to ask ourselves the question, with all of this market situation, with all of this uncertainty, do we want to be invested in the volatile, unprofitable companies? On the other hand, it has nice cash reserves compared to debt. They have $198 million in cash and only $4.35 million in debt, which is basically nothing. So the good news, SoundHound has enough cash to keep going for now. The bad news, they're burning through cash really fast, and with this $200 million that they've got and $350 million that they've spent in 2024, my question is, when will be the time that they will start diluting the shares again, and by how much will they do this? In 2024, revenue grew 85% year over year, largely due to Amelia acquisition. Subscription services now make up 66% of total revenue, which is great, but gross margin fell to 49%. It's less than sector's median, and it was down from 75% last year. This means that SoundHound is making less profit per dollar earned, but this is one of the downsides of acquisitions, and the management have actually said that the gross margins should start improving already this quarter, so we will be able to see this in the next earnings. EBIT margin is minus 140%, and it means huge losses. The company is spending way more than it earns, so by this we can see that they're not so close to profitability. Wall Street analysts price targets ranging from $8 on the low end to $15 in average and to $26 on top. And currently, for now, I would say that these price targets aren't realistic. They were given, most of them were given 3 or 4 months ago when the market conditions were completely different. The sentiment about SoundHound was completely different than it is right now. So now I would say that $15 per share sounds like a lot in current market conditions. And of course, when I say current market conditions, I mean all of the economical and geopolitical uncertainties, not only in the US, but in the world in general. And when I say 15 is a lot, I don't mean the actual stock price, I mean their valuation. Even now, when the stock is below $9 per share, their PS ratio is about 35, while sector's median is 2.87. So I can say that the situation improved, but the stock is still overvalued compared to the peers, although they're growing much faster than the sector median grows as well. So right now I can say that SOUN stock is priced for extreme growth. And of course, if the management, if the company delivers this rapid revenue expansion, the valuation might be justified, but we won't be able to see this until the next earnings results, which are not soon. And together with overall market conditions right now, I wouldn't be in rush to buy the stock of this company, although I need to say that the good outweighs the bad for me. If the market sentiment would be different, I would probably rate or start rating SoundHound AI right now as a buy. Because of the overall situation, I can do this, of course. I am rating it as a hold. But again, if overall market conditions would be different, I would probably be more bullish regarding SoundHound. But here an important note, I may be more bullish not because of the stock not being overvalued. It is overvalued, but if investors, if the sentiment would be in favor of this stock, I would probably be already buying. Don't forget to let me know in the comments what you are doing with your SOUN position, if you have one, or if you want to enter this stock right now. Thank you for being with me. I hope this information was helpful. If it was, don't forget to press a like button, subscribe to our channel. I'll see you next time. Happy investing!